Hello, good morning, everyone, and welcome to this bright and early start on today with the live Forex trading session. As usual, I'll just repeat quickly the purpose for this Tuesday morning sessions. As usual, when it comes to trading, it's a question of practice makes perfect. So it's just, you know, the more often you practice, look at the charts that you get better and better with trading. And as you will see from the morning sessions, there are also certain nuances to trading because trading is not a theoretical thing. You can't go by a strict textbook. You need to use the knowledge and information you have from the courses to then try and apply it to your trading. And sometimes it's a question of, you know, trying to decipher, you know, when is the best time to apply this. So, you know, you have to take all the factors into consideration before you make your decision to trade. So the aim of this Tuesday morning sessions is one, to give you all a chance to present if you want to. Of course, it's not compulsory, but if you want to present, I always start with giving someone a chance to present because it gives you a chance to practice and see if you're getting things right with trading. And then once we've gone through the analysis of the markets for today and any teaching points, after we've gone through that and decided our trading plan for the day, the session will more or less be ended. If you need to go to work, go to your business and log off, feel free to do so. But afterwards, if you do have issues with trading or questions and all that, we can then sort that out after we've gone through the trading opportunities for today. So that's the aim of the Tuesday morning sessions. It's an opportunity to clarify any issues, problems, questions you have with trading, because, you know, some issues, they're easily explained using the chart and in real time, and, you know, having a conversation than trying to do it via text. Of course, the online platform is there between the Friday sessions where, you know, I post my trades there. Although I must emphasize again, I keep forgetting to mention it in the previous sessions, because the aim of teaching you how to trade and all that is to enable you make your own trading decisions. So the hope is that you will not be waiting or relying on my posts on the platform before you go ahead and place your trades and make your trading decisions. So I always keep forgetting to remind everyone about that. So yes, I'll keep posting my trades as much as I can on a regular basis. But like I said, the aim is to enable all of you to make your own trading decisions. You can go ahead and place your trades, decide what you want to do. You don't have to wait for my posts to make a decision. And of course, you can always ask questions on the platform. And again, this Tuesday morning sessions gives you a good opportunity to ask as many questions as you want. We can have a conversation, look at the chart, look at your screen, do all that, because I've set this Tuesday mornings aside to go through all that. Okay, so having said all that, who wants to analyze the markets for us this morning? Does anyone want to have a go? Okay, so as usual, when you start trading, to start the trading day, you look at the economic calendar to see what reports of high importance are due out. Today is Tuesday, the 1st of September. The main market we're looking at is the Euro-US dollar. So we're looking for reports of high importance due out today that could affect the Euro or the US dollar. And we're also going to note reports of medium importance that could affect the market we're trading, which is the euro or the US dollar. So let's have a look. Today, 1st of September, again, make sure you're checking the correct time zone for wherever you are. I am in Rwanda, so it's GMT +2. So all these times I'm going to be looking at and talking about to be GMT +2, but obviously make sure you check your own time zone and check the reports relative to wherever you're based in the world. So always make sure you adjust the time zone so you don't check the reports at the wrong time. So today is 1st of September, Tuesday. This is our GMT +2 time. So let's have a look at what's coming out. This are all reports out of Asia, which have come out over the morning. And then at 6:30, half an hour ago, we had the Reserve Bank of Australia interest rate decision. So that's come and gone. So if you were trading a currency paired with the Aussie dollar, you would have been up to trade that, which I was up to trade that. So let's carry on. So at 8, this is Germany. Obviously, Germany is a major powerhouse in Europe. So of course, we'll note the report of medium importance. You can see this unemployment rate harmonized. And again, this is why it's important to note the reports of medium importance, because you can see here, its unemployment rate. Although it's harmonized, it's not the real major unemployment rate in Germany. It's just, they're just trying to harmonize the reports. But again, because it's got to do with unemployment rates, that could move the market at 8 o'clock from Germany. And of course, we're trading the euro US dollar. So we have to note that. Again, please remember this is our GMT +2 times. This is our Rwanda times. So that's the first report we need to note, due out of Germany, of medium importance. We can ignore Sweden, we can ignore Czech, we can ignore Hungary, we can ignore Netherlands, Poland, Spain. Okay, and then at 9:30, you can see here from the euro area, again, that's going to affect the market we're trading, the euro US dollar. So that's a report of medium importance. The ECB president with us is going to make a speech. Of course, the speech is a speech, it's not a report. It's a speech, which could just go on for hours. So it's a speech, not a report. But because it's the president of the European Central Bank, obviously people are going to note and watch what he says. So again, you have to be wary about that. Again, that's another reason why you need to note reports of medium importance. Those who've been trading already, you remember last week when the US Fed Chairman Powell, the Jackson Hole Symposium, which went on for 2 days, but during the 2 days, he mentioned something about the US going to allow inflation to rise, and then the markets reacted in a crazy way. So it just shows you that when the US Fed chairman or the ECB president speaks, it could potentially rock the markets, hence why you need to be aware of them when they're speaking. So it might not stop you trading, and again, like I say, it's not a report. He could speak for hours and he could end up not saying anything, because they're always very careful with what they say, because they know their words can affect the global markets. So the US Fed chairman and the European Central Bank president, they're always extremely vague and cautious when they speak. So he might end up not saying anything at all, which is usually the case, because they're very aware of the effects of their comments. But again, you need to note and be aware that he is going to be speaking from 9:30, and like I said, it's a speech, not a report. Okay, so again, another reason why you need to note reports of medium importance relative to the market you're trading. And then at 9:55, you can see we then have the proper unemployment rate report out of Germany at 9:55. So the first report of high importance due out today relative to the market we're trading, the euro US dollar, the first report of high importance is at 9:55. Again, this is Rwandan time, GMT +2. Out of Germany, the unemployment rate report. Again, remember the four major reports that are always of very high importance, which is unemployment report, unemployment rate, interest rate, consumer price index, which is inflation, and finally GDP, gross domestic product. Those four reports are always of major importance. And of course, again, Germany being the powerhouse in Europe, there's an unemployment rate, an extremely important report due out at 9:55. So that's a report of extremely high importance. So we're definitely going to avoid trading prior to this report because this is certainly going to affect the euro US dollar. So that's the first report of high importance. And that's another report of medium importance at 10 from the euro area. Again, we can ignore all these small European countries, Greece, Italy, Norway, just ignore all of them. Then the UK, we have, again, obviously this is more to do with the pound. We're not trading the pound, we're trading euro US dollar. But things to do with the housing market and mortgages, again, they're worthwhile noting them. But again, we don't have to worry about that with euro US dollar. And then at 11 o'clock, we have the euro area core inflation rates. Like I said earlier, the four reports that are always of major importance: unemployment, inflation, which is the consumer price index, interest rates, and gross domestic product. So you can see we now have inflation rate out of the euro area, which will certainly impact the euro and the US dollar. So that's due out at 11 a.m. Again, GMT +2 times. These are Rwandan times. So we've got two reports of high importance coming out so far. The first one at 9:55, German unemployment rate. And the next one at 11, the euro area core inflation rate. And of course, we can ignore Brazil. I can ignore all these reports of low importance. Then at 3:45, again, GMT +2 times. So out of the US, we have the market manufacturing PMI final report. And then the final report is at 4 p.m. again out of the US, which is the ISM manufacturing PMI report. Again, like I keep saying, if you're new to trading, you can just click on the report and read about the report. It's important you start to have a habit of reading about what these reports mean, what they are, so you can determine what their significance is. So over time, you'll be able to decide which reports, how important they are relative to other reports. And I'm going to tell you shortly what I mean by that. So it's important to begin to read these reports if you're new to trading and understand what they're about, what they mean, what their implications are. And of course, as we know, reports out of the United States affect all markets, all financial markets, all currency pairs are affected by reports of high importance due out of the United States. So that's at 4, GMT +2, Rwandan time at the ISM manufacturing PMI report. And that's it. So the last report of high importance today is the report out of the United States at 4 p.m. GMT +2 time, which is the ISM manufacturing purchasers managers index report. And as we know, the markets tend to trend sideways prior to the last report of high importance. So that's the basic teaching. The markets tend to trend sideways prior to the last report of high importance, and you want to avoid trading prior to the last report of high importance because of the high probability of the markets trending sideways. So that's the basic teaching, and that's what you need to always go with. But like I was saying earlier, There are always exceptions to the rules. You have to take each day on its own merit. And today is a good example. So we're trading the euro US dollar. This is the last report of high importance today at 4 out of the United States that could impact the euro US dollar. But, because again, that's the good thing about trading, there's always a but. But you can see that this unemployment rate from Germany and the inflation rate from the euro area are of extremely higher importance of much significance than this manufacturing PMI report at 3:45 and 4 o'clock. And again, that's how you begin to make that distinction by reading about these reports. And that's why I was emphasizing earlier the 4 major reports are GDP, CPI, unemployment, and interest rates. So what I mean by that is that there's a likelihood that this report at 9:55 or the one at 11 could cause the market to move prior to this last report at 4 p.m. because they carry more weight than this last report of high importance. So this is of more importance. The German unemployment rate and the euro area report is of more importance and of more significance than this last report. So, and then if we want to now even break it down even further, this euro area, because this is a report out of Germany alone, the unemployment rate, which could still affect the euro, but certainly this report out of the euro area at 11, the core inflation rate, this could definitely impact the euro. So on analysis of all these reports coming out, my own assessment is that this is the first and most important report today is the euro area core inflation rate. So I would avoid trading prior to 11 o'clock. And then just before 11 o'clock, I will assess the markets and then place my pending orders there, getting ready to trade around 11 when this report is announced from the euro area, because this is of huge significance and would have an impact on the euro, and it's of more significance than the last report here. So I'll have my first attempt at the market, or possible first attempt at the market, around that time. So I'll assess the market about 10 minutes before the report, place my pending orders and see what happens. And then of course, if I lose out on that first trade, then I will stop trading and then have my second attempt at 4 o'clock around the time of the last report of high importance. So again, this is a good example of, yes, that's the basic teaching. Do not trade, avoid trading prior to the last report of high importance. But again, the markets don't go by the textbook. It is you using that as a basis, but taking each day on its own merit, looking at the reports, you deciding which one is more important and which is the one that you would trade, avoid trading before or not. And again, that comes by you reading about these reports with time, and you begin to make that assessment. So for today, despite the fact there are quite a few reports coming out today, I'm going to keep out of the markets till 11, avoid trading till then. Then about 10 minutes before 11, I would assess the markets, look for trading opportunities, place my pending orders just before the report comes out, and then see what happens. Obviously, I'll post that on the platform. And then, like I said, if I lose out on that first attempt, I'll stop trading and then have my second attempt around 4 p.m. when the last report of high importance comes out. Okay. The other thing that's very important to do, and I don't know if you all saw my post from yesterday, on Monday, I have a habit of checking the calendar for the whole week just to see what's coming out for the whole week. And that's what I always do every Monday, so I have a good idea. And the reason why is that sometimes you can find a huge report coming out later on in the week that could actually impact your trading today. So on Friday, the 4th of September, we have the US unemployment rate report, the US non-farm payrolls report. It's called non-farm payrolls because they have a huge farming community and agricultural community in America. So when they are calculating unemployment rate figures, they exclude the farmers. They exclude the farmers. So that's why they say non-farmers payrolls. This report is of huge importance, mega importance. It comes out on the first Friday of every month. You find traders around the world anticipate this report, they wait for this report. In fact, some traders only trade once a month around this time of this report. That's the only time they trade, just once a month, they wait for this report. So it just shows you how important this report is. So, and everybody knows it comes out the first Friday of every month. So everyone is aware that this report is coming out on Friday. So you need to be extremely cautious trading during the week leading up to Friday. You need to make sure you definitely keep out of sideways trends and all that, because this is a highly anticipated report on Friday. So again, that's another good reason why you check the rest of the week. And you're all on the platform now. So if you go to the live Forex trading group platform, if you go to the events section, set up a meeting, which you can register for, trading economic news. So we'll meet on Friday. We'll have a live session on Friday and we'll trade that report together on Friday. Although the Zoom registration time is 1:30 p.m. London time, but that's actually the time the report actually comes out. So we're going to start the meeting 10 minutes before the report comes out. So you log in. So yes, although when you register, you will see the time is 1:30, but log in 10 minutes before then, because we're going to actually start at 1:20 p.m. And the details are on the platform under the event section, Trading Economic News. So we're going to meet on Friday and trade that report together. Okay, so you can see the economic calendar really gives you a very good idea of what's happening, when to check the trades, and how to approach the market for the day. And of course, you want to keep an eye on Market Watch, know what's going on in the global news. Like I said, the beauty about this website is that it's updated every couple of minutes. You can see they even have the report of the Australia interest rates that came out about an hour ago. You can see here they said the Reserve Bank of Australia keeps their rates steady and boosts term funding. But you can see all you just have to do is look at the headlines. Most of this you can see is about the stock market. There's nothing really major going on that would affect the currencies. Of course, we know about what's going on with China and USA. Of course, we know about the global pandemic. So it tends to be major things like that that would affect the market. And of course, when the ECB president talks or US Fed, you will see all of that on the Market Watch. So again, just keep an eye just to see if there's anything major going on that could create uncertainty in the market. So that's market. And of course, check for public holidays in the UK and USA. As we all know, yesterday was a public holiday in the UK. So we all kept out of the market yesterday. You want to avoid trading when there's a public holiday in the UK or USA. So let's go to the charts. Now that we now know what we're doing, we're going to, like I said, we're going to leave the market alone till 11, till the Euro area inflation rate report. But let's have a look at the chart. We'll start with swing trading. So I go to D1, the daily time frame. This is the daily time frame. So we can see the market trending up. That's the candlestick for today. Today, the 1st of September, you look at your data window. The moving average today is 1.1683. So 2 pips below the moving average today is 1.1681. So 1.1681. I'll just adjust my pending order, 1681. Again, 100 pips stop loss for swing trading, 1781. Modify, and that's all I need to do for my swing trading. So basically, I just keep modifying my order every morning with the moving average until the market takes my order. And again, as you know, with swing trading, that could take months. You can see this market has been trading up since May, and we're now in September. So that's May, June, July, August, 3 months. So yes, it might take you a long time before the market reverses. So again, you don't get swing trading opportunities often. But that's one of the advantages of trading multiple markets, because then if you trade multiple markets, you might get multiple opportunities. But it's your money management that determines how many markets you trade. And in fact, I'm hoping to organize a session on money management part 2 in the coming weeks for members of the platform. But of course, you'll be notified about that. So that's our swing trading. We now go to day trading, the 5-minute time frame. So looking at the 5-minute time frame, you can see where the market initially traded up, went sideways, went up, then started to go sideways. Then you can see where it started to trend up again. And now it's trending sideways. So we're just going to demarcate the sideways trend. So you can see it was going up and then now going sideways. It's quite a narrow sideways trend. So I don't think this is going to last very long. But let's just mark it out for now. So that's the highest point of the sideways trend. And either this or this is the lowest point. But let's start with the highest point. That's the candlestick there. The high there from the data window is 1.19969. So I'll round that up to 1997. So that's the high. Oops. There we go. And the low, let's see. So the low part of this week is 1985. Let's see what this is. 1984. So we'll take the lower one, 1984. 1984. And that's the low for now. I suspect that won't last long. You can see it's quite a narrow sideways trend. So for now, of course, as you know, with day trading, things can change any minute. So for now, the market is currently trending sideways. The market itself is above R1. So at the moment, you know, the only thing above the market is R2, which you can't use R2 trading using the pivot point strategy. The other opportunity is to sell below R1, which is outside the sideways trend. But this is what the market looks like now. But like I said, we're not going to be placing any pending orders for now. We're going to leave the market alone, and I'll reassess again just before the Euro area inflation rate at 11 a.m. my time. When I say the term narrow sideways trend, it's nothing special. I mean, you can just see yourself, it's quite small. It's just a figure of speech. It doesn't signify anything really. Whether the sideways trend is narrow or big or medium, it makes no significance. You know, a sideways trend is a sideways trend, period. I'm just saying because it's this narrow, you know, I'm sure within the next hour, it would either break the high point of the sideways trend or the low point. But again, like I said earlier, that's the beauty of trading. It's dynamic, you know. As you can see, even from here, and you see all the time, the trend just keeps changing. So it's up, it's down, it's up, it's sideways, it's up, it's down, it's sideways, it's all over the place. So that's just the nature of the market, really. So yeah, I don't think you should put much significance to whether it's narrow or big or small. I'm just saying that there's a likelihood that, you know, I will have to change the high point and the low point of that sideways trend soon, which has already happened. You can see already the low point has already been broken, which that's what I meant. You know, it's quite a small sideways trend, but there's no significance to that. So the sideways trend is always changing. Now, I'm just going to explain something also, which someone brought up on the platform. Let me bring up the whiteboard. Because on the platform sometime last week, the market formed a market resistance. Sorry, the market formed a market resistance last week. And I think this was prior to a report. And the question then was, why didn't we use the market resistance as a potential entry point to buy? Now, the reason why I did not use the market resistance then is this, because usually when a report comes out, there's extreme volatility in the market when the report is announced. So you can find, for example, the market just trending sideways prior to a report. Then maybe this is the point the report comes out, the economic news report comes out at this point. Then you can find for the first 5 minutes, you can see the market might be doing this. Just for the first 5 minutes, you know, there might be a lot of volatility. And again, this just comes with time and experience. And this is what I try and avoid, because I know when the report is announced that there might be, you know, a quick spike up and down with the markets, which is the volatility. If you had placed your order, because obviously when the market is trending sideways, that's when it tends to form a market resistance. So the tendency is that you probably be very close to the market. And this is what I want to avoid, because the report will then be announced, it will start to jump up and down, take your order, and then fly back down and take you out of the trade straight away. So that's why I was trying to avoid that. So usually the time I tend to use the market support and the market resistance strategy is well after a report of high importance, or if there are no reports of high importance due out. So if there's high importance due out, there's nothing crazy going to happen, then I'm comfortable using the market resistance and market support. But prior to a report, I know that there's a chance this could happen. The report comes out, the market jumps up and down, and it will just easily take your order from the market resistance or the market support and then take you out straight away. And that's what tends to happen about 5 minutes after the report, before the market settles into a rhythm of either going up, going down, or going sideways. So usually I like to, prior to a report, I like my orders to be comfortably, again, there's no hard and fast rule. You're always going to have losses whether you like it or not. But again, this is what I say, you always try and trade with caution. So I try and make sure my orders are, you know, comfortably away from where the market is currently when I place my pending orders prior to a report of high importance. And like, so we're going to have a live session on Friday to demonstrate that. And again, actually, let me go back to the platform, because you'll be able to see, let's go to the online platform. So let's go to the activity feed, because that's, again, I think it happened sometime last week on Friday. Let me see. Where, here we are. Okay, here we are. Good. So if you go back to the post from last week, Friday, you will see here, this is what I mean, but it's always difficult to explain, and this is a good opportunity to explain. So you can see here, last week, Friday, This was the market. You can see it had formed a market resistance there, but you can see I did not use it there. It had formed a market resistance there. So you can see this was prior to the Canada GDP and the US PCE price index report. So we're trading prior to this report last week, Friday. And again, you can go back to the platform and check all this trade. So you can see here, I was saying we're assessing the EURUSD prior to the report. The report was due out shortly at 1:30 on Friday. And like I said, I was saying, looking at the chart, the market is currently trending sideways and R1 is within the sideways trend. And you can see here, I said I have now placed a pending sell order just below the pivot point. And I said there are currently no clear buy opportunities. So that's the reason why, because I did not want to place a trade on this market resistance just before the report, and then there's a bit of volatility when the report is announced, takes me in, takes me out. So that's why I avoided doing that. And then you can see, once the report had been announced, and there were no more reports coming out, you can see later on in the day, when the market settled, if you look at the next post, you know, I was saying that this was after all the reports has come and gone, and you can see now is a different case entirely. So you can see now the market has now moved away from this market resistance. So now I was now comfortable using the market resistance to buy. So now I can place a pending buy order above the market resistance because before it was too close. But now that it's moved away and it's actually closer to the lower part of the sideways trend, I was now happy to place my pending order using the market resistance. And then my sell order was still below the pivot point. But again, like I said, when it comes to trading, there are really no hard and fast rules. The lesson really is just to take all the information you have available into consideration, you know, weigh all the pros and cons of everything that you have available for that day, and then decide which would be the best and objective way to place your trades. Because like I always say, the bottom line is that the maximum number of attempts you should have a day is 3 attempts a day. You should not have more than 3 attempts a day. So what I mean is that you have your first attempt. If you make your profit limit and you make your money with your first attempt, you stop trading. If you lose out on your first attempt, you can go to your second attempt. If you make your profit limit target with your second attempt, you stop trading. If you lose out on your second attempt, you can then go to your third and final attempt. And if you make your money with your third attempt, fine. If you lose out, you also stop. So basically, it is you choosing how and when you want to use these 3 attempts. Because you know, despite your best efforts, your best analysis, your best intentions, you're still going to have losing trades, whether you like it or not. You're never going to have a 100% success rate. You're not even going to have a 60% success rate. You are going to have losses whether you like it or not. So what you're trying to do is minimize what I call unnecessary losses. So for example, it doesn't make sense having 3 attempts and having 3 losing trades prior to the last report of high importance. It doesn't make sense having 3 losing trades during a public holiday. So, you know, there are certain things like that. So it's you just deciding, my first attempt at the market, when should I make that first attempt? When should I make that second attempt? And when should I make that third and final attempt? So this is exactly what we're doing today. We have 3 attempts today. I'm saying that I would rather use my first attempt at 11 o'clock. Again, this is all GMT plus 2 times. So I'm saying that Remy, with my analysis I've just done this morning, I would rather have my first attempt just before, I'll place my orders just before this report from the Euro area at 11 o'clock. I'll be happy to have a first attempt, and I've explained the reasons why in detail earlier on this morning. And like I said, if I lose out on that first attempt, I will not be happy to have a second attempt before the last report. So I'm saying if I lose out on that, my second attempt will be just before the last report of high importance. So again, that's just a judgment you have to make as a trader on a daily basis. You know, you take all the factors into consideration. What reports are coming out? What's in the financial news? Any major news coming up? What's happening the next day? Like we said, we have the US unemployment rate coming out on Friday. That could really impact and make us even extremely cautious leading up to Friday. So every day, you know, every day is not the same in the markets. It's not, you can't be rigid trading the market. I always say trading is a combination of art and science. So there are some fixed rules and some theoretical rules, but it's also an art. It's how do you apply it on a daily basis? Because this is real life, the real market, real situations. Every day is different. So you just have to navigate how you apply the knowledge you have. And, you know, so this is the beauty about trading. And that's why I always tell people that, you know, there's no way anyone can become very good at trading in just a couple of weeks or a couple of months. And the only way you can get better, excuse me, is just from practice, and experience. Because there's so many little tidbits with trading, reading about these reports, learning about these reports, observing certain scenarios for yourself. And naturally, you just get better with time. But as you can see, there's a lot to take in. But it comes with practice and time. So you just, you know, keep practicing, keep practicing. All right, I think I have spoken enough. Any questions? If you have any questions, you can raise your hand up or send your question through the question box.